One of the stocks that didn't participate in the rally, and considering that it has been one of the momentum boys, is Eicher Motors. It was under pressure with a cut of over 4%, and this came after the management cut its growth guidance for 2018 from 60% currently to a 40% growth, still very huge. Farah Bookwala, who has been tracking the stock and the chief of the company, is with us. Farah, what did you learn from Siddharth Lal?
Well, that's right, that, Eicher Motors has been, or rather Royal Enfield has been clocking an average growth of 60%, and it's the stellar boy on the block. And the company has said that, by 2018, this growth would come down to anywhere between 30 to 40%. So that's nearly half of the current growth rate that we are seeing. But this has to be put into a little bit of context, because one has to understand that by 2018, the company's third plant in Chennai near Oragadam will be coming on stream, and at that point the company's total production capacity would be going up to 9 lakh units. So when that happens, the company would be operating on a very, very large base, and it is rather difficult for any company to sort of replicate 60% growth rates on such a large base. So it would be coming down. But technically and on a fundamental basis, the company does not have anything that should probably concern the market, or for that matter the street. Fundamentally, it is a very strong company still. Its growth continues to remain very strong, with demand continuing to see a big jump up. At the same time, one has to remember that when the company expands its manufacturing capacity, the booking times or the delivery wait that currently we see will in fact be coming down. So that would in fact be a positive. Of course, there are some negatives as well, such as the fact that the novelty around the Classic 500 is wearing out, as well as the GT Continental has not done well in the international markets, but they are smaller things. More importantly, the company is expecting that in FY17 it will touch 6.2 lakh units in volumes. This is what we are picking up from sources, and that would mean a 37% jump over FY16. So clearly a very positive thing.